The financial markets regulator received yet another blow, the second setback in as many months, with the district court upholding petitioner contention and ordering the U.S. Securities and Exchange Commission to review its rejection of certain financial products. The court ruling brought down the curtail on long-standing lawsuit that began in October 2022 between Grayscale Asset Manager and SEC, which could lead to the approval of the first spot Bitcoin ETF in the United States. Ordered and adjudged that Grayscale's petition for review be granted and the Commission's order be vacated in accordance with the opinion of the court filed herein this date. Still, the SEC has 45 days to appeal the ruling, in which case it would either go to the Supreme Court or an en-banc panel review, or could still reject the application on other grounds. The case made headlines amid ongoing spot Bitcoin ETF traded fund mania when Grayscale wrote an open letter to the SEC. Through its legal team, stewarded by Davis Polk, the asset manager attempted to convince the SEC why approving all the spot Bitcoin ETF applications would be the better decision. According to the court, the SEC's denial of Grayscale's spot ETF proposal was arbitrary and capricious, given the Commission's failure to explain why similar products are treated differently. The victory means the SEC must review the rejection. Regardless, the outcome is a massive win for Bitcoin miners and the several defendants currently fighting the US SEC. The court decision has provided much-needed impulse to break consolidation.
Following the Grayscale ruling, the next big task for the United States Securities and Exchange Commission is to address the long list of ETF approvals. The first deadline to decide on 7-spot Bitcoin exchange-traded fund application is drawing closer. Investment firm Bitwise will learn if its ETF will win the SEC's approval on September 1st, while BlackRock, VanEck, Fidelity, Invesco and WisdomTree will all be awaiting the SEC's decision for their funds by September 2nd, according to several SEC filings. Meanwhile, Valkyrie is set to hear back from the SEC on September 4th. The US Court of Appeals ruled on August 29th that the SEC's rejection of Grayscale's application to convert its Grayscale Bitcoin Trust into a spot Bitcoin ETF was arbitrary and capricious. But this doesn't mean the SEC must approve Grayscale's application or others in the future, says Bloomberg ETF analyst James. In an August 29th Bloomberg interview, James explained that Grayscale's win definitely increased the odds of the successful outcome for the next wave of applicants. He is not sure when that day may come, though, as the SEC can delay its decision and has 2 more proposed deadlines for each fund before using force to make a final decision on the 248-day post-filing. For the awaiting applicants, the final deadline for the SEC are all in mid-March next year.
TradeTech, a private debt and real-world asset marketplace located in the UK, said on Tuesday that it has launched a tokenized U.S. Treasury offering on the Layer 1 blockchain XDC network. The U.S. Treasury yield tokens, which are available to professional investors on TradeTech's YieldTech platform, are blockchain-based representations of shares in a U.S. Treasury bond exchange-traded fund. Securitize, a supplier of tokenization services, onboards purchasers, keeps a track of share ownership, and administers dividend payments. The launch of the new product coincides with tokenization becoming as one of the most popular developments in the damaged digital asset sector. According to a Bank of America report, the tokenization of real-world assets, which involves creating blockchain-based tokens of conventional financial assets like government bonds or private equity, could change the financial system. Bernstein predicted that the market for real-world assets could reach $5 trillion in the following 5 years. According to realworldasset.xyz, the demand for tokenized treasury bonds increased by almost 6 times this year to $622 million, while yields in cryptocurrency lending have fallen due to significant deleveraging during the bear market. Crypto companies and investment funds seek the products in the order to benefit from rising government bond rates. That's it in today's special segment. For more such updates, follow 3.0TV or log on to our website www.3versetv.io or scan the QR code to know more.